Good morning, everybody. Welcome to Wise Tech for Wise Money, where we speak with business founders, investors, business leaders and specialists who are building, funding and improving the real economy. Today I'm joined by Andreas Schweitzer, founder and managing director of Arjan Capital Limited, a London-based finance, trade and advisory boutique. Arjan Capital describes its work very clearly, helping money and goods flow across the markets. The firm works across trade finance, alternative investment opportunities, market expertise, and advisory services for professional investors and global organizations. Andreas spent more than 30 years in finance, trade funds, and cross-border markets. He's also the author of a book named Trade Works, focused on trade finance as an investment opportunity and why this is often overlooked and an area that remains so important to global businesses. Today we're going to talk about Andreas' journey, what Arjan Capital actually does, why trade finance matters, how it helps companies move goods and manage working capital, why investors should understand it, and how technology and AI may change the future of this sector. Yeah, that was a long introduction, but welcome to Wise Tech for Wise Money. Glad to see you're making the most of the sunshine in the background. Yeah, it's really good to have you here.
I thought St. James's Park is a great place for a podcast.
Without doubt, I wish I was sitting alongside you. Before we get into it, and obviously into the merits and purpose of Arjan Capital, let's start with you and your journey. Tell me a little bit about your background, how you got to where you are, and how you come to form Arjan Capital.
Yes, I tried to wrap up the long story fairly short, but I'm a Swiss man who grew up in southern Germany because my father and my grandfather run a family textile business, second generation. And my father told me when I was 18, just a while ago, my son, if you want a safe job, work for a Swiss bank. That was 1978, so he was absolutely right then. I'm sure he's right today in a different way maybe. So anyway, I did that, and only very briefly. And I ended up with a company called Jacob Suchard, a very large food conglomerate, and they put me to Panama and said we need someone who helps us handling trade. Little did I know what trade finance was, no idea. And that's where we traded coffee and cocoa and booked ships and went to cocoa farms. So it was a phenomenal learning curve at a very young age. And I did then other things in life and picked trade up again in 2009, and we still do it now. And we like trade because we think it's something, regardless if the work is a happy place or a worrying place, you need trade finance.
Without doubt. Was finance always the direction you wanted to go in?
Sorry?
Was finance always the area you wanted to be in, or it was just obviously your father?
To be very honest, no, I always liked trade. That's true, but my family was in textile. I liked this too, but I realized I would need to have more knowledge about the business in particular, and the textile industry in the 80s, at least in Germany, went in a very, very difficult patch. I always liked finance if it's related to trade. And so I'm saying I stick to what I like and hopefully know.
So when you went to Panama, tell me a little bit about that. What was it like? What did you learn?
Panama was a faraway place for a young man, but I was of course very astonished that it was very US driven. I mean, the canal was managed by the Americans. Hospitals had all US standards, so if one thought one comes to some faraway place, it was a very sophisticated place with a very good life standard. And I learned the trade very quickly there from the roots. and it was under Noriega. For those of your listeners who don't remember that, Noriega was an army general. He was basically Panama's dictator, and the Americans sort of tried to make a deal with him against money laundering and drug dealing, until he found he was better off being self-employed. And then that led to the invasion of Panama by the Americans in 1989, if I'm not mistaken. I was still there. There were busy times in Panama at the time, but a very fascinating place because it was a lot of trade happens. You know, you have the isthmus, you have the canal. Panama lives on shipping and trade. Company formation, that's how this whole Panamanian business model developed. It's now a different one than it used to be, of course. Everything is different 50 years later. It's only Panama.
How did you come to be in London?
Yeah, I have always been a little bit in London, and at the end, the main reason then 20 years ago were family reasons. And so it was a family decision, and it's a lovely place to be. Also business-wise. Again, I think for trade, London, it's a great base.
You don't miss working in Germany, or you don't think you could have done this in Germany just as well?
Oh, I'm sure I could. I'm sure, but we happen to be in London, and you cannot always run around. You have to be somewhere, establish your base, and run your business. But interestingly enough, we set up a new fund in Luxembourg, and a lot of our investor base are Germans. And I translated my book into German. In German, it's called Trade Finance. A better title than Trade Works. It doesn't sound good in German. And the German investor loves this asset class, trade finance. It's a fixed income type of product.
So tell me, I mean, trade finance is obviously, a lot different from the other financial markets we work in. It's connected to real goods, real companies, real buyers, sellers, and obviously payment flows. Explain to me a little bit about how you function, how you implement trade finance, how you serve your customers.
Maybe we run a securitization fund, so we need something. We need a document, we need an invoice, we need an asset we can finance. So we are not a bank who just gives a loan. We're not in the banking business, the lending business. So a customer comes to us and says, I have a big retailer buys 1 million caps. So the seller in Vietnam, for example, he makes these caps and says, I can sell 1 million, but I can't afford selling it because the buyer, the Marks and Spencers, the Selfridges, the JC Penney's, you name them, it doesn't matter. Large buyers normally impose payment terms, and they want to pay after 90 days, after 180 days, so they make the seller to their bank. And the seller says, I need to have the money when I sell it because I have to buy new material, I have to pay my people, I have costs, and not everybody can easily borrow from the bank. So this is where trade finance come in. You finance the trade. You pay the seller immediately, you take the goods as collateral, and you take a credit insurance or a payment guarantee of some kind, a letter of credit from the buyer, and then we replace what banks often did. Merchant banks financed trades, financed the merchant, but with ESG and with a lot of regulation, banks today, large banks like large clients, and reporting is expensive, compliance is expensive. So many deals are not done because they're just not making enough money to cover the costs. So that's why boutique offices like we exist. We look at the trade more than at the balance sheet, and So either we finance the trade, or the other way, which is called factoring. You take the invoice of the Waitroses, the JCPenney, the Make Marks and Spencers, and say, okay, I take this invoice and I discount it. So I take the risk on the buyer. And that risk, again, you can mitigate with credit insurance and others. Of course, the problem is not with the large companies I mentioned. The issue is with the SME. There you have more credit risk than with others. And this whole thing is an SME game, because the SME needs the money to operate, and some are at the limit what they can borrow. So we help them to grow.
So where do you get the money from?
Where we get what?
Where do you get the funds from?
Where we started ourselves with our own money, and then it rapidly outgrew what we can put available. And we have German investors, we have family offices, we have European investors mainly who like this asset class, because it's a subset of private debt.
So do you ever have any liquidity problems, or you always have ample amount of money available?
We always have too many deals, and then if we don't have too many deals, we have too much money and not enough deals, and then you have too many deals. It's it's a highly imperfect world. You never have if you don't get more business, then obviously your business has a problem. So we always get new business in, and that's why we keep raising money.
So how do you get the new business? I mean, people just come to you because you're known?
I wouldn't put it that. It would be lovely, but I mean, we try to make a lot of noise in a way. We are on LinkedIn. We have nearly 30,000 people. We have 8,000 subscribers to our newsletter. So I would say a certain market knows that we exist, and come to us through recommendation. Investors who are invested in companies know of us. So we get a bit of a deal flow. We like to speak at conferences, because if you speak at a conference, you tell the people the topic, and those who are interested, they come to you, and the others, you don't annoy the others. So it's we write articles on Forbes regularly about. I'm happy to share this link on our website. There are many. There's a lot of literature if someone is interested in topics. Of course, all free. Just go there and download it, or listen to the podcast. Yeah. So it's like always. You always have to drum up business, but we try to be active in the niche we are.
What type of companies do you mainly work with?
Sorry?
What type of companies do you mainly work with?
I would say it's SME companies, and often it is the SME company that sells to a large cap, because a large cap company imposes the payments, the long payments, and the SME needs short payments. So this is often small company sells to large company. And we have German companies, Spanish companies. We sell kiwis from Chile to Colombia, for example. We sell peppers from Dominican Republic to the US. I would say 80% we are European-centric. Industrial goods from Italy to Spain. Alternative medication, it's a different word for cannabis. We finance into the UK. We do whatever is legal, and we stay away from sanctioned countries or goods. There's no need and no interest. And, so you see, there is so much business around. And in my book, I wrote about something called the trade gap of 3,000 billion, million, 3 billions in American language, is not financed because the banks don't finance it, or the seller cannot afford to make that sale because of the payment gap, as I said. So here's 3 billion of trades. Maybe not all are good. You know, if only a small percentage is good of it, there's a lot of deal flow. You don't have to go. Sometimes people think this is something that happens in the middle of Africa or the middle of Central Asia. No, this happens in Manchester, in Zurich, in Frankfurt. It's a problem of our financial society, trade finance, for SMEs.
So where does the deal originate? Is it from the seller? Who comes to you first?
You have both ways. You have the factoring, that's when the buyer would come. Could you please finance that trade because they want to have their money now, I only can pay in 90 days. Or you have what's called reverse factoring, that's when the seller comes to you. We only deal with the buyer. We don't do seller financing or supply chain financing or inventory financing. We want an invoice. I want a sale that is accomplished that needs to be financed.
Tell me how the discount invoicing trade works.
Oh, you have an invoice that is due in 90 days. Let's say you say, okay, I pay it today, and I deduct 0.5%, 1%, 2%, 3% a month. It depends, but these are the ranges we are talking about, depending on product and market. And so you give the client, let's say he wants an invoice for pre-finance due in 2 months, and let's, for argument's sake, we say 1% a month, 12% a year, so you pay him 98%.
And keep the balance yourself. Excellent. So tell me, are you saying that there's not enough people doing what Arjan Capital does? There's a shortage of services in this industry.
I'm not interested to drum up competition at all. There is, interestingly enough, there is a lot of trade finance in Asia. And so we would have a lot of competition there. This is an industry in its own. The American market also has quite a lot of trade finance providers. In Europe, much less. I don't know for what reasons, but it's an asset class that is done on large scale. For example, big insurance companies, they issue trade finance bonds for half a billion or a billion. But they also say your minimum ticket is 25 or 50 million. So this is for larger family offices, for institutions. We address also from a market side the investor who can put in 100,000. That's the minimum by law. So we address professional and semi-professional investors as the law would word it. And we play a mid-market game from the investor side and from the customer, from the company side. That's the space. And there are a few companies who do it, and the market could afford much more, of course. So as long as others don't grow, we try to grow.
Yeah, interesting. I've never realised there was so much demand and such a small market in Europe. I always thought it was a massive market. Tell me, you mentioned the Luxembourg fund. Tell me about that.
Oh, we set up we have a friend who is a trade fund manager, and he suggested to set up a fund with him in Luxembourg. So we set up a securitization fund, which is Luxembourg has a very established law. It's a very good brand, and I think investors are very comfortable. And I must say, the entire process with the fund administrator is very professional and well organized. So it takes a lot of burden away from us. By the way, we use a lot of AI on the fund side.
Right. Tell me exactly how that works, though. So the money goes into the Luxembourg fund.
Yes, an investor says, I'm interested to subscribe. So then we give him an onboarding code. Then he uploads his KYC, where he lives, the last utility invoice, the passport, provides a bank account number, and then sends the money to the administrator of that fund, which is normally these are very large bank companies. They operate a bit like a bank, but they are administration companies. And then we bring a deal, and we analyze our deal internally with the team, and when we believe that the deal is okay, then we show it to the credit department of the fund. While I was the sponsor, I set up this fund, I still have a third party who validates what we bring. So my word is a suggestion and not at all law, and the fund is not obliged to take the trade. And that's also very reassuring for us because there is a truly independent party who looks at it. Does this transaction make sense? And when it does make sense, then the fund becomes a counterparty. For example, we have artificial grass, which we sell to stadiums in Spain. So they now take the tender from the Spanish community or municipality, and they buy the grass and they resell the grass and they get paid directly from the municipality. So we avoid counterparties, which we don't need. Each counterparty is a risk. So the less counterparties we have, the better.
Sounds fantastic. And is the credit insurance reasonably priced, or is that quite expensive?
No, you look about at 0.3% of the invoice value. Yeah. So I think it's always worth having a credit insurance. Except you have a letter of credit, which is quasi an insurance itself. Insurers don't insure letters of credit because they say the bank is already giving you this insurance. So one shouldn't get paranoid by insurance, but one should handle it as an extremely useful tool.
Sounds a fantastic business. Your website talks about alternative investment, trade advisory services for professional investors and global organisations. Is that just about trade finance, or what other services, or what other services are you offering within that framework?
If you are in trade finance, you are in payments because each trade needs to get paid. Payments today have become a very complicated topic. Some banks like certain industry, others don't. For example, we have a client in the software industry. The banks do not like to discount a software invoice because it's not a tangible good. The gaming industry has many people gamble, but someone also has to pay the gamble. There are few industries which banks, fuel, petrochemicals, some banks don't like for ESG reasons. So not every bank and financial institution likes the same transaction, and we are, I think, quite knowledgeable who does what, who likes what, and can advise our clients who is the right financial partner for them. So we advise on the trades. Basically, in a way, we provide a lot of free advice as a prerequisite to do the trade.
You give it as free advice, or you charge for it?
It depends. If someone only wants advice without trade, then of course we have to charge. But if someone wants to do a transaction and they are genuine, then we give the advice for free because we say this is simply part of putting it together. But again, if someone comes with, there's a common sense element in it. You have so much budget to give free advice, and then you have to say, okay, guys, either now you pay or you do a deal with us. But we are not a charitable organization either. But I don't think we are not stingy, but we also have to pay our bills.
What about on the investment side? Is that just like the Luxembourg fund, or is it wider than that?
We like to pool everything through the Luxembourg fund because it's such a well-organized system and instrument, and it protects everybody. There is a broad base of law. The Luxembourg law is known, established, reputable. So I'm not a friend of SPVs. We have one or two managed accounts, but they're just more work and more costs. So I try to streamline everything through the fund. It's just better for everybody. It's audited. Yeah.
Talk to me about factoring. Is that a large part of what you do? And if so, when's best to use factoring?
I would say factoring you want factoring you want when you need money quickly. You have an invoice and you say I can't wait 90 days, and that's when factoring comes. Factoring is a great tool because it gives you immediate cash flow if the bank discounts your invoice. That's the whole point, and that's you have to check before you make the sale, because if you, as this typical software developer, if you sell to your buyer, and at the end the bank says, but we don't discount software invoices, then you are stuck. So it's good advice to check if for a seller, if the invoice can be discounted, which very often it can.
So what happens? So I'm a seller. I raise an invoice for say a
Yeah,
million pounds.
yeah,
The person I'm selling to can't pay me for 90 days. So I go and raise that money by factoring.
exactly.
But then the buyer actually can't pay me. What happens? That's covered by insurance, or how does
Okay.
it work?
Yes, you have two things. You have it with recourse and without recourse. So it could be that someone buys the invoice and then takes ownership of this invoice. And if then that invoice doesn't get paid, that party has to deal with it. We would only buy with recourse. I have no intention to take other people's credit risk. We provide financing where financing is required. So I want a security against my factoring. I want a guarantee. For example, we have a lot of UK factoring, and the UK SMEs, they are relatively small, and there we get a mortgage on the house, we get a guarantee from the principal, we get other assets. But I must also say, in 5 years, we only had to use once the collateral we had. So the quality of our customers is very, very good. The financial behavior and quality is good. But you're right, I now go to a credit insurance and say, I have company Smith in uh, in Utah or in Switzerland, wherever it is, and I upload what the insurer wants. I upload their financials, and I upload the invoice, and the insurer will come back and say, on this company we take a risk of 100,000 or 1 million. So then I have to make sure that my invoice doesn't exceed this risk, or I get additional collateral. It's a very streamlined process, and it's automated. You upload, and the invoice, the insurer comes back very quickly. With today's technology, all this data confirmation or verification is done very swiftly. Even across Latin America, for example, they are as organized as we are. Maybe Africa, it's a bit more domestic. But credit checks today is not a big hindrance. And if there is not enough collateral, then the owners have to bring something else.
That sounds fantastic. Tell me what being a boutique allows you to do differently from larger banks and institutions.
Now we accept to invest more time and effort in the trade. Right? Look, if we were a tailor business, we would be in Savile Row in London as a bespoke shop. We are not doing things off the peg. To voice is very extreme. You have all the medical invoices, for example. You go to your hygienist for £90, you do this for 30, something else for 200. All these millions of invoices per day, they all go into a big computer or machine, and they are factored at a minimal rate at zero something, because it's a huge, massive, many £100 million business. No intervention. We are on the complete other side. We are on the bespoke side. You come to us, Gary, and says, look, I have a client who buys something, can be services or product, but the client is in in the US, and we need that. We help you with the contract. We set it up, and a bank. Look, a bank will not do a 1 million deal because it's a 1 million deal is as costly as a 10 million deal. I schematize. Of course, banks do 1 million deals. As you say, for a bank, it's not worth doing small deals because there is not enough money coming out of it at the end, and their cost base stays the same. We have a much lower cost base, and we charge also much more. And let's not get this wrong. We are much more expensive. Factoring at the moment, we don't give out money for less than 2% a month. But we also have high costs in people, in operations. So it's a different model. But 2% of your margin, if you have a margin of 30%, okay, you get your money immediately and your margin is still 28%. If you are in the commodity business and you have 1.5% for the whole trade, then this is not where we can help.
So this can be really lucrative with big tickets.
Big tickets and also high margin, and also our tickets are between 100 and 500,000. We also do sometimes 50 or we do 1 million, but at the moment, so 100 and 500 is the sweet spot. But this is also where the market is. Not everybody sells something for 1 million. Sure. Many trades are in the tens of thousands and the 100. That's where the bulk is.
How big is your team?
We did about a year in 24. We probably did in total 160, 170 million in turnover, and also a few hundred trades.
That's fantastic.
So it's very cyclical. There is time where you have more business, where you have less business. For example, at the moment we have a situation. The Spanish laws obliges now that every vehicle needs an emergency light. For guys in our age, some sort of Miami Vice light with a GPS function. Right. That means you have now to import 34 million of these lamps because Spain has 34 million cars. So the importers come now to us, and it's a beautiful business. But they take a few thousand, a few pallets, very high margin business for us, and we import it from Spain, probably from Italy. The Italians probably buy it from China, and we get a confirmation of the stock in Spain. And this should have been finished by last December, but 34 million is a big number. It still continues. And then probably Portugal is the next country who gets inspired by Spain and said, let's do this legislation. So here business comes up out of nothing, but we also have business disappear. For example, we financed the NHS in Malaysia until the Malayan government came and said, this is now a privilege for Malayan financial institutions. Obviously, we are whatever we are not Malayan. We have a Luxembourg fund, we have a UK company, I have a Swiss passport. I mean, I don't tick any Malayan box, so you have to make a choice. Either you become a Malayan financial institution or you go out of the business. So we decided to leave that business. So regulation works for us and works against us, and the art is to find the market where we can add a value.
What makes a deal look interesting to you? Is it the buyer, the seller, the goods, the documentation?
Oh, definitely the documentation, definitely. And this is often the weakest point where we help the documentation and the buyer, of course. The goods at the end is nearly irrelevant, because if the buyer says, this is the goods I'm buying, whatever use they make of it, that's fine. You get an insurance problem, or the insurance is not coming in when the buyer says, yes, I bought them, but I ordered them in green and not in blue. Then the insurer will say, this is resolve your conflict. And so this is very important, that the buyer has confirmed the product they are getting. So quality inspection and product inspection is key.
Are there credit checks involved? So
So
is a credit profile very important?
so it's pretty important. I mean, we still have the goods as collateral, and if we have a down payment, even better. But you don't want to have someone who just went bankrupt. You know, they have other priorities. So but just because someone doesn't have good financial is not a reason for us not to look at financing his business, because that person is probably a trader. He has a buyer and a seller and can make a margin. So we do a profit share with them. And if the trader has a strong balance sheet, is not so relevant if we can validate that the buyer buys.
So what happens to a company if it's had a bit of a, it's had a very rough time, it's low on cash, its lifeblood is doing trades like this, but now their credit is tainted because they've had a tough time. Now, how do they get through this? Can they
So you
get
see,
through this?
let's say the seller, you describe the seller. If the seller is in a bad financial position, I mean, they have to look at this, they have to raise equity, or they have to get a bank loan if they can. So there are two things now. If the seller needs money to buy the pieces to produce a product, so we can finance that. We can finance color. Let's say that someone makes towels. We can finance the cotton. We can finance the color. We can finance all the ingredients. But I need to get paid when the seller buys these products. I do not want to have. I want to have finished products. I don't want to have unfinished goods or goods that are in the process of being transformed. For example, you take color and you take cotton to make a towel. I do not want to be in the middle of it where the towel is not woven, but the color is already dispersed in the machine, and at the end I cannot recover the cotton, I cannot recover the color. This is supply chain financing, and this is a science which is managed by many companies who do supply chain finance, but it's a completely different discipline. We like to sell the finished towel, or we like to finance the paint or the color or the cotton or the screws. What is it? I want to deal with finished products and not with products in transformation. So that is the limit where we do not go, because we don't think we are very good at it.
So you get involved in the whole process.
No, not in the manufacturing, only in the selling of a finished good. Yeah. No. We are not at all in the manufacturing.
So tell me, why do banks not really do this business anymore, or why do they want away from it?
Banks do, but they do in very restricted roles. For example, large banks like large companies. You see, they like to give money to Mercedes or to Volkswagen, to name, or to GlaxoSmithKline, name any of this, but they look at a healthy balance sheet. They are much less interested in the medication a pharma company sells than at their balance sheet. And they like large deals because they have a much higher cost structure, they are regulated in a much tougher way and differently. So this is why trade finance businesses and trade finance funds exist, why trading houses exist. I look at the pharma product, the bank looks at the pharma company. That's a fundamental. We are product driven, a bank is more financial, data driven.
Okay. Tell me about your book, TradeWorks. What made you write it? And before we wrap up, I'd like to know a little bit more about the thinking behind it, and before I read it, what it's going to teach me.
Thank you for asking. When I started this business again, and it was just around COVID where we started a new fund. We were looking for research, and we realized that while for stocks and bonds and derivatives and foreign exchange, many smart people wrote a lot of smart things. But if you go on Amazon or anywhere and you find a lot of literature on these topics. But on trade finance, there's much less. On trade finance, you have to go to the World Bank or the Bank of England or to the International Chamber of Commerce. You need to go to a supranational institution, or you need to go to a body that deals with it explicitly. And so I thought, we have done now so much research, and I have a great research colleague, King's College trained, Pakistani, King's College trained, very good fellow, and we did a lot of research on this whole industry before we went in. And at the end I said, why not trying to wrap this up in a book? And then I did it, and I made all the possible mistakes, and it ended up as being a small book, and fun enough became a bestseller on Amazon. And the first version, the first edition. And then for some reason I wanted to translate it into German, because the German language is 100 million and a lot of German SMEs. We tried to explain in this book what we're discussing in this podcast. What is trade finance? Why is it relevant? What does it do? And when I finished the book in German, I went to a professional translator. I should have written it in my mother tongue and not in a foreign language, but that's now too late. So this wonderful financial journalist who's fluent in German and English, she came back with 100 comments. So at the end I had to reintegrate all this into the English book. So basically the translation of the Germany made me rewrite the English book, and that's how we came to the second edition and named it Trade Works, and hopefully did a much better job. We updated it, we discussed blockchain, we discussed Saudi Arabia, we discussed a lot of topics, and now we retranslated it into German. So it took another year, and it's a fun effect. And fun enough, we get investors who say, oh, if you wrote about a book about your business, you know your business, which is, I'm very grateful for such a compliment, but it is also true. Probably the one who benefited most from this book is me. It's an incredible, valuable learning curve if you write what you're doing.
Could you re-educate yourself?
I wouldn't write another book in a hurry. It's a lot of work and it takes a long time. But we now made an audiobook out of it, and we run presentations of it. And today with AI, it's phenomenal. You just tell an AI system, extract the following, and you can give to clients very, very detailed answers. Which
sure. I will read it, definitely.
it's very kind of you. You can listen to it if you rather listen to it. Yeah.
I think I'll read it.
Yeah.
I might listen in bed, but tell me, before we wrap up, tell me what's the next stage for Arjan Capital?
Now, Arjan Capital, we use the trade name Artist Trade, and we also do Artist Real Estate, going into the real estate market and financing as well. But for us is more trade, grow 100 million fund or 200 million fund in trade finance and in real estate. In real estate, we do the same thing. We are very focused on niche businesses, on non-performing loans, on small, mid-sized developers in Germany. So we want to be large niche players. This is our strategy, and we need to grow. We need good people. It's not so easy to find the right people for the business we are in. So this is always a quest for me. AI, we certainly will do a lot of development on the AI side. We look at crypto for payment. So we have a lot of challenges, motivating challenges, I would call them, not even problems.
You just triggered a little bit more of my, of me being nosy. Tell me a bit more about the real estate. I'm interested in that.
Over trade, some people come to us and say, can you finance our real estate? But we are not lenders. As I said, we are not a bank. I cannot just lend, but we can finance various things, and we can buy non-performing loans. And the non-performing loan market, again in Spain, is an aftermath of 2008. 18 years later, you still have tens of thousands of non-performing loans in Spain.
And you buy them at a discount.
We buy them at significant discount, and then we've partnered up with a team doing this. And in Germany, we have a partner who invests in small and mid-sized developers. So people come to us because we have a fund, we manage the fund, and like to team up with us, and we like to team. We like partnerships. We find this very interesting to deal with other boutique players who have a very focused mind.
What's the exit for a non-performing loan? So you buy a non-performing loan at a discount. What's the exit?
I would say between 3 and 18 months is probably what it is. It depends where you are in the process, but we had never had longer than 18, maybe once or twice. Probably the bulk is between 3 and 9 months.
So how do you exit? Just explain to me.
You take over the real estate and you put the real estate in an auction, or you sell it. You make a deal with the owner. You liquidate. You sell the asset to someone.
Right. Okay. So you just trade it basically.
Now you buy it. You manage the whole process. You buy the debt, the non-performing loan. By that you own as a collateral the underlying real estate. Then you are in court because you cannot just go and sell someone else's houses because of a bad loan. There's a whole process and sometimes this process takes a bit longer. And either then we sell it to someone else, or we sell it back to the owner who might make us a deal. You buy at minus X and he pays you X plus 10. There are various options, but it's again a very labor-intensive market. Very labor-intensive.
I think you need to write a book about that as well. Okay, look, well, I think we've been on here for quite a long time, so it's been a really great podcast. And
Gary, thank you very much. This was really an inspiration.
Yeah, well, we could actually talk for longer, but you'd be sitting in the park till tomorrow. Tell me, where can people find Arjan Capital? How can they get in touch with you, and how can they learn more?
Oh, of course, our website, www.artistradeinvest.com, gives you a lot of insight, and the book is on there, and a lot of articles, and our details are there also, and you can just email me or call me, and I can send you all the details if you want. And we're always happy to have a chat about the book, about trade, and we like these type of conversations and inspiring conversations. We do a lot of that because I think we learn a lot, and we learn a lot from other people's comments.
Well, I'm very interested, and don't go away, but I want to thank you for being on my podcast.
Gary, thank you so much for the invitation. It was really a privilege.
No, it's brilliant, but don't go away for a minute. I just want to thank you for being on here, and I want to thank the listeners for listening in. They can find me as usual on LinkedIn or at Gary at a1solutionsinternational.com. So I'd like to talk to you again in a minute. I'm just going to close this down, but once again, thank you very much for being on this show.